All right, everyone. This is John Thomas, the Mad Hedge Fund Trader, broadcasting to you live from the heart of Silicon Valley, California, the center of the universe and the source of all your recent profits. And that's me standing in front of a B-29 Boeing bomber, the one that dropped the atomic bomb over Hiroshima. The only Boeing bomber I have never flown, I have to admit. Unfortunately, there are only two of them in flying conditions. That's the main reason. So today we're going to talk about the greatest capital spending binge in history and the implications for you. So take out your pen and paper to take out notes or start typing in your smartphone. What I'm about to tell you will blow you away and change your life, for I'm in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why. Why listen to me? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first dedicated international hedge fund, 5 years fracking for natural gas in Texas, now 16 and a half years publishing the diary of a mad hedge fund trader. I am one of the founders of the modern hedge fund industry. And if you ever need a ride in a World War II fighter, I'm your guy. So what is the greatest capital spending binge in history? Well, that took place during World War II, 83 years ago. Over a 3-year period, we built 297,000 high-performance aircraft, 193,000 artillery pieces, 86,000 tanks, one of which was driven by my dad, 2 million trucks, double-tracked all East-West airlines, and created from scratch 4 atomic bombs, which is no easy trick. And that, by the way, is the Memphis Belle, which is now the originals in a Memphis museum, but there are copies all over the world. This is one in Cambridge, England, which was used to make the Memphis Belle movie. So what is today's capital spending binge about? That is all about the Magnificent Seven. There will be $632 billion in AI spent by 2028. It created the NVIDIA $60,000 Blackwell chip. They're making millions of those, and they have a waiting list they promise to upgrade generations every year now. They are rolling out AI apps and services faster than most people realize, causing earnings to explode at the Magnificent Seven first and everyone else later. It's kind of like when the internet just started, all the buying focused in 3 companies, Dell, Microsoft, and Netflix, and then spread out to the entire economy. So we're seeing the second rollout of this capital spending binge going on right now. That creates a bull market in stocks that could take the Dow up to 240,000 by the 2030s. And this is a World War II Wildcat Navy fighter, which I found hacking through the jungles in Guadalcanal about 5 years ago. The other reason to listen to me is a 51.63% average annualized return for the last 2 decades. That's versus 25% for the S&P 500. We operate at about double the rate of the S&P 500, and that works just fine for me. Yeah, let's see if we have any questions here. Somebody says they've actually flown a B-29. Well, that means you have to be at least 80 years old, Steve, because there's a long list of pilots to fly the remaining 2, and I'm on that list. And it's not cheap to get on that list either. Here's another reason to listen to the Mad Hedge Fund Trader.
Hi, my name's Wilson, and I've been with the Mad Hedge Fund Trader, John Thomas, since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80–90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
Well, thank you very much, Wilson. That's quite the endorsement. Of course, our secret weapon is the Mad Hedge Profit Predictor. That's a market timing index, artificially driven for the last 12 years, analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours of calculations to come up with this, and it was worth every second. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you are trading against algos alone, you will lose. Algorithms provide you with a defined, systematic trading discipline that will enhance your trading profits. This is a typical performance of our market timing index. You see, you get a lot of buys at market bottoms, sells at market tops, buy, sell. It's like owning a printing press for $100 bills. And I'm not the only one using algorithms. Some 80 to 90% of all trading is now algorithmic driven. Of course, this is what the market timing index shows up over a 2-year period. And you can see we get really crucial buy signals at market bottoms. We got one here in April. Before that, we got the big one in October. And you can see we got other ones back here. And of course, the great thing about this index, it also gets us up out at the tops. So we got out at the top here, over 70 here, here. And right now we're stuck at neutral, right around the 38 level. So why cover all asset classes at once? It's a lot of work. Of course, we're happy to do the work for you. I love doing this job, and I do it all day long. Information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do, and therefore interest rates, is an incredibly useful advantage when picking stocks. Some asset classes will be doing great, while others are dead in the water. It will point you to where to trade the winners and where to avoid the losers. Give yourself every advantage. Know what's happening all the time, everywhere. There is a method to my madness. September is earning its reputation as the worst month of the year, with a firm double top in the stock market. September 18th interest rate cut is now a sure thing, but how much is already priced into the market? The next sell-off is the one you buy for a post-election rally. US dollar is getting trashed and it could stay weak for years. Technology stocks will recover after a much needed correction, but in the next cycle, they will not be alone in making new highs and bringing in new wealth. Energy is getting dumped on recession fears, but it'll recover next year. Buy all stocks and bonds on dips, and now it's all sectors. Precious metals, of course, is the least risky, most advantageous asset you can buy right now. Gold has become the only way the average Chinese citizen can save money because they can no longer speculate in real estate or copper, and they don't trust their own currency, the Chinese yuan. Central banks in emerging countries are continuing to buy gold, with purchases tripling since the middle of 2002 amid fears of financial sanctions and a mountain of sovereign debt. Goldman Sachs is taking a more selective approach to commodity investing, pushing gold but avoiding crude oil and copper as China continues to drag. Silver dives on economic slowdown fears, entering a sideways range, and they will stay there until the EV and solar panel businesses recover. A global monetary easing is at hand. You're going to have many countries cutting interest rates all at once. buy precious metals on the dips as interest rates are now falling decisively. Here's a chart for gold. We've been in it for the last year. It's been on an absolute tear, up 30% in a year. We're looking for another 25 to 30% buy next year. If you like gold, you have to like gold miners. That also has been up on a solid trend. Barrick Gold, the world's largest gold miner, we're looking for $40 in 2025. Of course, silver, after we get out of this recession scare, will go off to the races and eventually hit $50. So, and if you like silver, you're going to love the AGQ, which is a 2x long silver ETF. It's already come from 47 down to 30. You could make it back up to that 47 level very easily, or about a 60% gain. Stocks just recently had a nosedive. If the Fed doesn't cut by 50 basis points on September 18th, the stock market will crash, or at least have a mini crash. I'm hoping for the 10% correction, but there's so much money out there, 8 trillion in cash sitting on the sidelines. We may not even get the 10%. So look at two market bottoms on September 18th and October 20th. NVIDIA dives on fabulous earnings in one of the greatest buy the rumors, sell the news moves of all times. NVIDIA is now about 40% below its June top, but is still one of the lead stocks in the market. Similarly, Broadcom beat and the stock tanked there, driven by sales of its AI products and VM software. Biden blocks Nippon Steel takeover, no doubt to save union jobs these deals usually destroy. Any coincidence there's an election this year? And volatility index soars 50% in one day from 14 to 22. I love these moves. Great entry points for long plays. And I'm waiting for more. Eli Lilly is now $1 trillion stock on their weight loss drug. That is the first biotech company ever to become a $1 trillion company. Okay, so if you buy stocks here, what are you betting on? Well, this is what we bet on last year. High inflation, an oil shock, a labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, and poor earnings. This is what we're betting on for next year. Plunging gasoline prices, and I've seen prices as low as $4.50 in California. Imagine that. Of course, it's like $2.50 everywhere else. Weak commodity prices, stabilizing supply chain, a low 4.2% unemployment rate, better than expected earnings, 1.25 trillion in stock buybacks, falling interest rates, and a weak dollar. Sounds like a buy to me. Of course, this year we have the one complicating factor that there's a presidential election. With polls unreliable, uncertainty is at a maximum, and markets hate uncertainty. So look for the markets to drift sideways down into October. Once the election is over, markets will rocket as uncertainty disappears. It makes no difference who wins or which policies are implemented. Markets are going to go to new all-time highs. With markets at all-time highs, 90-day T-bills yielding 4.97% are still a good choice. So buy any weakness in coming months. We run barbell portfolios here at Mad Hedge, 50% big tech and 50% domestic recovery. Big tech is where 2% of the US workforce produces 35% of the market cap and 35% of US earnings. That is the big cap spending play, which we are replicating, not seen in 83 years. The other half goes to domestic recovery. These are the low interest rate plays. Those include railroads, airlines, cruise lines, industrials, couriers, steel companies, interest sensitives, banks, commodities, housing, construction, and credit card companies, hotels, casinos, and online ticket sales. And who is a good front runner? Well, you can buy the exchange itself. It's the people who sell the shovels to the gold miners who make the big money. That's what happened in the California gold rush, and that's what's happening now in NASDAQ, the modern day equivalent of the shovel seller. And we're looking for another 20% gain in NASDAQ by the end of the year. Microsoft is having a serious sell-off now. We're looking for a bounce and then new highs after that. looking for 500, and that is a B-17 Flying Fortress, which I fly occasionally at air shows. Meta seems to be the tech stock that's holding up the best because of their head start in AI. Their profits are tripling on improving sales and massive cost cutting. They know every social media post you've made for the last 20 years. And we're looking for 600 in Meta this year. And that's me with a B-24 Liberator that I also fly. Amazon knows everything you bought or even thought about buying for the last 25 years. After a sell-off finishes, we're looking for $250 sometime this year or early next. And for you airplane people, that's a B-26 Marauder, twin engine plane, which flew in World War II. And of course, NVIDIA, everybody knows NVIDIA, everybody's naming their pets after NVIDIA. It's the P-51 Mustang of the modern age. That's one I flew a few years in Florida. I've flown quite a few of these planes over the years. They have a global monopoly on top-end AI graphics cards. And Google, currently having a nice sell-off on their antitrust trials. I'm looking for $250 a share. Eventually for Google. That's another early generation P-51 that I fly. Palo Alto Networks, hacking never goes out of style, and 3 companies have a monopoly, and customers have to buy all 3 to stay in business. After an earnings disappointment in February, we loaded the boat here, been long ever since. We're looking for new highs, and that is a B-25 bomber, which is another twin engine, and that's the one that was used in the Doolittle raid over Tokyo. Second half of the barbell is a falling interest rate play. Bets on falling interest rates over the next 2 years. Global economic recovery to begin in 2025. Upside potential for stocks is far greater than tech from here. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive industries. Makes a great counterweight to a tech-heavy portfolio. We could spend the next 2 years rotating back and forth between the two groups. Okay, JP Morgan, a front runner here. We've been long for the last year and a half, anticipating lower interest rates, which are finally happening. Got a really nice sell-off today. Give it another 5%, and we'd be a strong buyer, close to the 200-day moving average. Home builders, DHI, the #1 construction play right now. Home builders can negotiate on their own lending and also offer you free upgrades to get houses moving. This is why the new home building industry is doing much better than existing home sales. Looking for $250 a share there. Visa, of course, is having a fantastic run. Another great falling interest rate play differentiator. They're one of the largest lenders in the country through their credit card business. Buy Visa on dips. And Union Pacific, any economic recovery, you have to move a lot of big stuff. Union Pacific is the largest in the country in this area. And that also has essentially turned into an AI company. It certainly is trading like one because they have AI algorithms keeping the trains on time. You move a lot of small stuff also in an economic recovery. You got the initial pop here in FedEx. Look to buy in a dip. I'm targeting 400. And Berkshire Hathaway is the one-stop barbell portfolio. They have heavy weightings in both banks and technology stocks. They're the largest outside owner of Apple, for example. And they're also a huge buyer of their own stock. They bought 25 billion worth last year, and they'll buy every dip this year. So if you're selling your Berkshire Hathaway, chances are you're selling it to Warren Buffett directly. So look to buy here on dips. We're targeting 600 later this year. Freeport-McMoRan has been suffering from the China slowdown. This is more of a 2025 play. We are aiming eventually for a global copper crisis because of the demand from EV, solar, war, which uses a lot of copper, and the expansion of the electrical grid. Okay. Emerging markets, whenever you have a dollar collapse or emerging markets take off like a rocket, we're targeting $70 this year. That's because all of the emerging markets, once their currencies strengthen, means they can get higher prices for the commodities they sell. So that becomes a pure dollar play. Okay, enough for stocks for now. Bonds also hitting new highs for the year, and we expect that to keep on going for a while. The yield curve has de-inverted, meaning that short-term interest rates have fallen below long-term ones. 2-year interest rates are now at 372, 3 basis points lower than 10-year ones at 375. It's a clear signal to the Fed that interest rates must be cut soon. Yield chasers post record demand for junk bonds. That's helped make 2024 the busiest year for the issuance of new corporate high yield bonds, with 357 billion sold so far this year. Markets priced in a 50 basis point rate cut, holding on to a massive rally. A cut of only 25 basis points on September 18 could give us a $5 sell-off, which you need to buy into. So you want to buy TLT, junk, Annaly Capital, double B rated loans, and REITs on dips. Here is the TLT. We bought down here in the spring. We also have a lot of leaps in this area. We think we get 105 or 110 by the end of the year. And of course, that takes the interest rate on the 10-year Treasury down to 350 by the end of the year. That's been our forecast all year. And of course, junk bonds had an 8% yield. We're now down to about 6. Also a screaming buy. They're hugely misnamed as junk. They really are high yield plays where the default rate is vastly exaggerated. It never actually happens. Crown Castle International is a high-yield 5G cell phone REIT. Rapid interest rate cuts are coming soon. And again, we're targeting 150 on CCI after picking it up at the 91 level. Foreign currencies, if you lower interest rates on the dollar, everybody sells it because they're not being paid as much as they used to. That creates a weak dollar, which actually is quite a good stimulus for the U.S. economy. Dollars hit a 7-month low, could be a decade-long move. The yen carry trade is back, with hedge funds piling into positions they bailed on only a few weeks ago. Just a matter of math. Now that the Bank of Japan has given up on interest rate rises anytime soon, what this means is more leverage, risk, and volatility for all financial markets. In other words, more trading opportunities. The prospect of falling interest rate means that the greenback is toast by all of the foreign currency ETFs, the Aussie, the Euro, the British pound, and the Canadian dollar. Here's the Aussie, solid uptrend since April. We're looking to it eventually hit 1-to-1 against the US dollar. Aussie is basically a call option on the recovery of the global economy. And emerging market currencies always move the most when you get a weak dollar. We're looking for a 40% gain here. Euro on a solid trend, despite being in the middle of the worst war since World War II. And they are also raising interest rates, reducing the differential between the US dollar and the euro. Crude oil is now down on the year after a precipitous sell-off. Blame a weak China, lost OPEC discipline, and overproduction by Iraq and Iran. Avoid the worst performing asset class in the world for now. U.S. production is now at an all-time high at 13.4 million barrels a day. Big oil has become more efficient with better horizontal drilling and hydraulic fracturing. Fossil fuel industry also has massive tax incentives, which can get you a 10% yield in the leading master limited partnerships, expected to bring nearly $10 billion in subsidies by 2034. And this is the long-term trend on oil, as cars switch over to using EVs and abandon gasoline. This is eventually what happens to the price of oil. And in China right now, EVs are outselling internal combustion engines for the first time in history. So what do we do about this? Well, why do you really need my help? The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? Well, when the market goes from 600 in the Dow, where it was in 1982, up to 41,000, dead people never sell. They do really well in that market. Okay. Okay. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can get a 10 times return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 51.63% average annualized return. That's what we have to offer. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. And occasionally he lets me fly this plane, which is 100 years old. Greg turned 100,000 into 3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money left over to send 3 kids to college. And here is another longtime Mad Hedge follower.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day, I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right, thank you very much. So what do we do about all this? Well, stocks buy the next big dip or the next vol spike. Bonds buy dips. Commodities stand aside. Energy stand aside. Currencies buy foreign currencies on dips. Precious metals buy dips. If you were not up 51.63% in the past 12 months, as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. 51.63%, that's a performance most people would die from. Die for, sorry. You get that kind of performance, you get to do things that other people don't get to do, like take the Queen Mary owner's cabin from New York to England. You then can take the Orient Express from London to Venice, England. Here's the very long-term view. Here's where the big money will be made. The 2000s, the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade, which started last year. So are you ready for a replay? The last time we had the identical demographic setup as to today was in 1982, and the Dow went up 20 times in 18 years. Are you ready for a replay? Well, if you take 2009 as the last market bottom, take 18 years upside, that takes us to Dow 120,000 by 2030. And if you think I'm crazy, We're already 2/3 of the way there at Dow 41,000. So be careful what you wish for, because you just might well get it. Except this time it's different. We now have an AI tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI-based products and services are just starting to roll out. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetime. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 51.63% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine Corps combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And no, that's not the plane I flew in Desert Storm. That is a 1932 de Havilland Tiger Moth that I flew in Cambridge, England a few years ago. Notice the design flaws: gas tank directly over your head, and no brakes. It just has a tail skid, so you can only land on grass. This is a typical trading record for 1 month. You can see here we bought the S&P 500, made 16.3%, sold short treasuries, made 8.6%, bought the Russell, bought Amazon, bought Apple, and then stopped out of Biogen for a 21% loss. We stop out of losers very quickly because it's easier to dig yourself out of a small hole than a big hole. And then you can see the rest of the month, we made profits on every trade, buying Palo Alto Networks, shorting the yen, shorting treasuries, buying SPYs, and buying gold. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 24 and into 25. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how it works. Our algorithm predicted that NVIDIA was about to see a major breakout. So we sent out a buy recommendation. It looks like this. Buy NVIDIA at 480 or best. And of course, last January, that was a pre-split pricing. We opened the trade for a $10,000 weighting. You needed to buy 21 shares. What happened? Well, NVIDIA went up 45% in 22 days. Did we just sit in our hands and congratulate ourselves? No. We sent out a sell alert to take profits. Sell NVIDIA at $695 or best. And on this trade, a $10,000 investment made a profit of $4,515 in just a matter of weeks. So this is a history of our Mad Hedge 10 baggers, trades that we invested in where the stock went up 10 times or more. We bought Zoom, it went up 10 times. We bought Lam Research, it went up 10.6 times. By the way, Lam Research is a nice buy kind of right now. NVIDIA went up 30 times from our original cost. Square went up 25 times. Moderna, we bought pre-pandemic, that went up 40 times. And Tesla went up 178 times from our average split-adjusted cost of $2.35. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full-time. Trade from anywhere, anytime. More than half of our followers now do all their trading on their iPhones. Supplement your retirement income with the satisfaction of booking trades by the hundreds. And that's me sending out a trade alert from the coast of North Africa, trying as hard as I can to smile because it is 120 degrees. With my Mad Hedge Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 a year, or an average of little less than one a day. Live biweekly strategy webinars like this one with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, access to a 16-year database on investment ideas, searchable by name and ticker symbol. I'll even give you the name of a surfing school in North Africa. Warning, it's a lot harder than it looks. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt up begins, and believe me, it's coming. This is the Global Trading Dispatch newsletter. It's in your mailbox 5 times a week before the market opening, so you can get your orders in. There's also Mad Hedge Hot Tips, also in your box every day, giving you the most urgent news events that have happened overnight and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their emergency investment 911. And I'm not going to charge you $3,500. That's the full price of what I'm offering you on my website. This is the real deal. Costing this product cost me millions of dollars. The best customer service in the industry running it cost me millions more. Here's the offer you can't refuse. 6 months for just $997, a 71.5% discount to the website price. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the link on the chat box on the right. And David, I see you've already put it in there. Thank you very much. Click on the link. It's only going to be open today. We only make these offers on rare occasions. This is the day to do it. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spot in any market. Just click on the chat box on the right. This time we're offering a money back guarantee. If you are unable to make money with our service, you can get a 100% refund at any time. Just 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success, which you can execute now because the market is still open. 95% of these alerts make money. Don't leave good money on the table. And here, just to give you a tease, this is a chart for that alert. What I'm not going to tell you is this a buy or a sell? Is this a long or a short? You have to subscribe to our service to find out. But suffice to say, your probability of making money on this one is extremely high. So if you're going to work with me for the next 6 months, it's a good idea to find out who I am. Oops.
Auntie.
Let me turn this off. Okay. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League Baseball and becoming an Eagle Scout. That's me in the high Sierras. There wasn't much to do in rural California in the old days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 70, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions where I learned how to fly and jump out of perfectly good airplanes. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. That's me in parachute school when I'm in my early 20s. That's me advising the Taiwanese army. Of course, doing research in Asia in those days meant carrying a 45 caliber stun gun everywhere you went. And after 10 years of government service, all I got was this box of medals, which I trot out once a year on Veterans Day. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. There's my commercial pilot's license. That's the old type that they issued 40 years ago when I got out of the Marine Corps. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry joining Morgan Stanley. After 10 years there, I started my own hedge fund. That's my original Morgan Stanley ID from 1983. And unfortunately, the man who signed it died in 9/11, getting people out of the World Trade Center. And that's me losing the All Japan National Karate Championships, never enter a karate final with a broken wrist. Ouch. Of course, I did my turn during Desert Storm, working as a pilot, and also occasionally used to manage a tank brigade for the Marine Corps. I'm kind of a multitasking kind of guy. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to buy the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade. And that includes you. If I can take a $50,000 account up to $500,000, that is more job satisfaction than I could get anywhere. In the little free time I have left, I pursue my first love, flying vintage aircraft on weekends. You see an old plane flying loops over San Francisco or London these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So when you make millions of dollars for your customers, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. And I promised to not to tell who. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really poured in. Peter plowed his money into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built up his fleet to 16 flying aircraft, which today are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed to brisk 250 miles an hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a piece of clear sky over the White Cliffs of Dover, between 2 big fluffy cumulus clouds, and commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time is no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer at the local pub. Let me make millions of dollars for you as well, as I have done for thousands of other followers over the last 16 years. I look forward to working with all of you. And I guess I should put a warning in front of this video, because I have had reports of some people getting airsick just watching it. Let me see if we have any more questions. Let's see, reading that. Okay, so let's move on here. We only have a few minutes left. So 6 months for just $997. Let me show you how to make the money to pay for your own subscription. Just click in the chat box on the right, which David has very quickly put up there. And a couple of people have put in here, thank you for your service. And I get that every day, and every day it's worth it, believe me. And I'm still making my contributions, even at my advanced age. I believe in being on the side of the good guys. Okay, so we have a couple of minutes left. Let's see. Let's go back here. This is jumping all over the place. Any more questions? And let's see, I have here 1 questions. Do your recommendations cover stocks only, or do you cover other financial instruments? The answer for that is that every trade alert we send out gives you 3 choices. You can buy the stock, an options trade, or a basket through an ETF. That way you can tailor your own trading to your own level of experience and risk tolerance. How often are your alerts sent? We do not send them out every day like clockwork. We only do these in very infrequent market bottoms and market tops. There's no law that says you have to trade every day. There's no law that says you have to have a position every day. We tend to issue most of our buy alerts at market tops, at market bottoms, and most of our sell alerts at market bottoms. That's how you actually make money in the real world. Anybody who can help you do that is golden. Most people do the opposite. They buy tops and sell bottoms. If people ask me what I do for a living, I tell them convincing people not to sell stock market bottoms, and that just about covers it. Okay, let's see. Any other questions here? Recommended account size. You can really start with as little as $10,000, because 1 contract on our typical trade alert generally requires only $200 or $400, depending on the stock. So we literally have dozens of students trading off of dorm beds, who then graduate to larger and larger amounts of money. Every trade alert we send out is geared for a $10,000 investment. And if you want more or less, you can then adjust the contract size to reflect your amount of capital. Here's someone saying, thank you for the macro analysis. Yes, I've only been doing this for 55 years. After 55 years of practice, you tend to get good at something. Let's see, what else do we have? Let's see. Mhm. Just going through the questions here uh, quickly. Here's another one. Can basic beginners use this service, or is this just for professionals? The answer, we have everybody from 90-year-old ladies doing this in rural Oregon to the biggest hedge funds in New York. So everything in between we cover. Turns out always knowing what every asset class is going to do, or at least having an opinion about it, is pretty valuable. So everybody can use this information, although we do charge more money for the bigger guys. Okay, any other questions? Here's one. I live in Australia. The US market is only open at night. Can the service still work for me? Answer is we have hundreds of people in Australia who are subscribers, and many of them make quite a lot of money doing this. All you do is put in limit orders overnight, and over time, you actually end up making more money than people trading during US hours because you're not around to make the mistakes during market hours. And a classic example of that was the August 5th bottom. It opened down 1,300 points, closed down only 500. The people who were in Australia never saw the 1,300 bottom and therefore had no reason to panic and sell. So they did quite well. Here's another question from Jeffrey. Are your alerts sent via text, email, or some other way? Every alert we send out goes out via text first, because you can get it in 5 seconds anywhere in the world. After that, we send the email version out minutes later, and that includes all the charts, all the research, and all the logic for doing that individual trade. You eventually do this long enough, you become an expert on every instrument and every asset class, and you'll end up telling your friends what to do with their investment money. Okay. Any other questions here? Okay. Do we get access to your performance? The answer is yes. We do a position sheet every day with all of our longs and short, all of our trades for the last 2 years. We then post it on the website, which you can get into with a login ID, and you can actually download the Excel spreadsheet onto your own computer and play around with it any way you want, adjusting the risk, adjusting your exposure, and so on. And that is all part of the $997 service. And we adjust that spreadsheet at least once a day, have it posted on the website within 30 minutes of the close of the market every day. We run this service like I ran my old hedge fund, with the same algorithms, the same services, the same minute-by-minute approach. Average hold time is a good question. Generally, we aim for front month options so we can take advantage of the accelerated time decay going into the end. But occasionally we get lucky. Several times this year, we have had trade alerts where you got 90% of the next profit the next day. When a stock went up 5 or 10% the next day. That's happened in NVIDIA a few times. By the way, we made money on both the long side and the short side in NVIDIA. In July, we were selling short all the big techs like crazy. That really worked well for July. Okay, let's see. Do you have stout? Here's another question. Do you have your stouts about your algo trades available to see, such as maximum drawdowns, average profit loss, so on? Everything that we produce with our algorithms shows up in those performance charts that I've put up a few pages earlier. Those are marked to the market every day, includes every trade we've ever done, and that's how we averaged 52% return for the last 16 years. Okay. Okay, so I think we're just about out of time here. Let's see if there are any more last questions. Okay, reading that. Okay, David, I think I'm just about done.